Alright, folks, welcome to this week's Forex commentary and market review. And um, I think it's not going to be the new month, but when I post this one, but it's going to be a new trading month by the time we start observing this markets because tomorrow is the first day of December, and um, it's the last trading month of the year. And honestly, it's crazy that we have this year gone already, and it was only January. I remember vividly, you know, all of the energy I put into this year, and all of the things I wanted to do, and it's just crazy that we have 11 months gone completely, and it's a new year again. Anyways, I think I'll just have two commentaries for this month, and before I go on holidays, um, because as we go into the mid month of December, everything gets sluggish a bit, and we have a couple days, that that particular Christmas weekend after Christmas. I think a couple days after Christmas, it's just a holiday period, right? So, I mean, I'd like to think that if I couldn't make um, X amount of money, I don't think I'll be able to, for 11 months this year, I don't think I'll be able to make it for the later half of December. I mean, I shouldn't do that to myself. So I'm going to give myself to the holidays, and I'll just be quiet. Or I might make a post, I don't know, maybe post something of myself. I don't know. But I would not be recording any more commentaries. Now, speaking about commentaries, I thought about dollar index yesterday, thought about dollar index today, and I was just, I don't know, I was just rethinking my life choices. I mean, throughout this year, because this was the only period we had very good price action on the XY, and I think we were this was this was our best period this year. I'm not gonna lie. It was very interesting calling the markets move throughout this period because it was just playing out. And this was the part that got me really frustrated that I stopped recording the commentary. I think I don't know, it was September because of the consolidation in markets. And now again we're still in consolidation. I mean, if you look at one, two, three, four, five, six, seven. Within 7 trading months on dollar index, we only have two bullish. I mean, bullish monthly close, because all of this price action had, you know, some kind of relatively bullish PA on the intraday time frame or on the much more subordinate time frame, but they weren't bullish. I mean, at their closing prices, anyways. So this is very frustrating to trade. Absolutely frustrating to trade. Last week I had no business on dollar index because what we wanted to see at the start of the week when when I was recording last week was I was talking about this imbalance here, this old volume imbalance here on daily time frame, and you know we had all of these candles that were trading inside the range of once this candle, and I wanted to see the markets return here and for the turtle soup, and then we see the weekly buys getting established because the weekly time frame was bullish. And what happened after this candle close was we were trading below this level here, which was, I mean, it was really disappointing because it's now an inversion level. I mean, see how the markets open here, return back here, and this kind of thing. I wouldn't take the other side of the markets. I wouldn't go long on foreign currencies. I wouldn't do that because I'm bullish on DXY for every reason. So and for the fact that I am going to be a short-term trader, so it's very difficult to qualify objectives, especially when I want to take these kinds of setups, because we have this last down close candle. This is the auto block, and um, that's it. So this kinds of, if I identify this as a draw on internal liquidity, I would not want to take the trades, because I want to capture price, better price movement, because it's still risky in the sense that DXY could just continue to the upside. And I usually hate these kinds of things, because the only way I could maybe take the trades or anything is if I'm studying lower time frame price action at key times of day and all of that. Then I could be encouraged probably to take the trade, but I still wouldn't go to lower time frame, because once I look at the high time frame and I've built narrative of the high time frame, that would actually define if I go into lower time frame or not. I recall being bullish like a couple months back. I think 7 months or so. It's been a long one that I wanted to see the X like trade bullish, and yeah, this is May, so it's about 6 months now I've been bullish on DXY, because if you overlap the COT hedging program and everything, you'll see that there was a shift in the high time frame institutional order flow around this time, and around this time period was when we're seeing back and forth in USD JPY, and essentially what just gave off everything was we had the markets close through this volume imbalance. This was the only thing that completely sold me out. That I knew DXY was bullish, and what we're seeing is relative strength issues. Yeah, extremely. That's what we're seeing. We're seeing relative strength issue. Now, mind you, this line, before I delete this line, is this consecutive downward candle, the change in the state in delivery. Okay, so I'll take it off here. So by the time we were trading above this volume balance, I mean, you can see the heavy consolidation. USD was on. This was in July 21st of July, and this is about 29th of September. That's like a 2 months consolidating range. Price action this year has been not, and I'm usually not encouraged if I'm talking about it, because I wouldn't like to talk about price action and the markets just completely does something else during the week, and I'm unable to talk about the market online for some reasons known or unknown to me. I cannot come online and talk about the markets or what I intend to do, because sometimes I'll think those strictly following me would understand that okay, how we validate the weekly buys, and currently I'm sure they are not seeing anything on the chart, because if they saw something, they'll probably push it to me online and tag me and stuff like that. And it's just messy price action, this back and forth. Now anybody who is trying to short-term trade, like my positions that I held on Euro USD from the previous week were stopped out last week, it's even more difficult to hold trades, because you try to hold them this particular week and you get stopped out on this particular week. So if you don't take anything off your trades, you're not going to make money. And this particular week, say you were holding your initial setups and you want to engage under the same buys or something, and you're not being careful, you're going to take a loss and your initial trade is going to get stopped out. And the following week you became very skeptical about buys, and the market prints and the markets print again, and you're unable to catch anything. So imagine if you're trading in this kind of condition. I mean, look at all of these kinds of weeks. Something that after this kind of bearish price action, we saw the markets open up and trade almost taking out this high, and in fact the markets did it and started selling off and returning back inside. This kind of price action is extremely difficult to trade. I mean, this is obviously Now it's a scalpers market, but consolidation. There's something I learned a couple years back, and it's in one of those videos I uploaded on my YouTube. That was liquidity runs, right? Yeah. And what I was trying to say is that when markets are in consolidation, consolidations are usually geared towards the high time frame institutional order flow, because what I was trying to say is that while markets are in consolidation, they would respect the rules of price action while they trade towards the high time frame, order flow, the long term buys and stuff like that. And that's why we still have all of these kinds of trading. We're still seeing the markets trade bullish because there is an underlying narrative that these candles are printing off of, even if market trends are extremely weak. Now, what am I going to say about this market today or this month? What am I going to say? Let's look at the monthly time frame, please. On the monthly time frame, we didn't have that closing basis through this candle. Okay, the only thing this month did was trade into the 3 months fair value gap, and that's all. And we returned back inside range. Now we currently have this fair value gap. Now, trust me, if you ask me, do you think the markets are going to trade into this gap? I will absolutely tell you no. I mean, that's what I believe, that the markets are not going to return into this gap. But can the market return into this gap? Obviously, yes. I mean, the markets will do whatever they want to do. I mean, that's that's what markets will do, and that's why if you are faced in conditions like this, I mean, for someone who is looking at this market and is thinking, how do I interpret price action? When I think the markets can possibly trade into a gap here, or or not, for some reasons we are going to evaluate in the subordinate time frames. That's why you need validation. That's the only thing, because currently now, whoever is interested in trading dollar index this month, I'm not gonna lie to you, I'm not interested in taking any trades on DXY. Probably not until the year runs out, maybe until next year. I don't know, but right now I have very strong distaste. The same distaste I had when I stopped recording commentaries for about 3 weeks or a month. It's the same distaste I have right now for dollar index, because it's absolutely frustrating. Absolutely frustrating. And more so, I can't imagine what somebody who doesn't have maybe discipline and stuff, what this kind of price action will do to them, because you're absolutely gonna lose money. That's just it. You are absolutely gonna lose money, especially if you're trying to trade in line with the long-term buys. If you're just going with maybe the daily buys and stuff like that, you're scalping. Oh, you're fine, because this is the type of market that fits those type of trading profile or traders profile. If you're a scalper, well, or even a day trader, that's fine, because you're only looking at the daily range. You just want to trade the daily range expansion for day traders, right? And if you look at key details, you can quickly evaluate if you're going to buy a particular daily candlestick or you're going to sell a particular daily candlestick. So would allow this on the okay, this is monthly time frame. We'll allow it on the weekly chart, and we're gonna see. So currently, this is the monthly fair value gap, which rests below the swing low here. So it means if markets will trade into the monthly fair value gap, markets are going to trade below this swing low here, because we have a swing low here. We have a lower high to the right and a lower high to the left of this candle. Okay, this is the anchor, this is the swing point. And last week's candle was indecisive because we didn't trade above the previous weekly high and we didn't trade below the previous weekly low. And the underlying narrative on dollar index is bullish. which means the markets can absolutely trade below the previous weekly low and expand. Or the market doesn't even have to do that if the market has interest in taking 154. That's the first scenario I thought about, or the first two scenarios I thought about, because we have this weekly candle establish that monthly bias, even if this month didn't close um, bullish, which again it's a suspect, it's showing weakness on dollar index. I mean, supposing we close bullish on monthly time frame, it makes this candle very significant for us in interpreting what markets are currently doing. But the market closed um, bearish and inside the previous monthly candle. Okay, this is what I mean by bearish and inside the previous monthly candle. Bearish close and inside this monthly candle. This is the range from this low here to this high. So it closed inside this candle. And that's still showing weakness, that we haven't moved much since the prior month's closing price. So can DXY return here? Absolutely. Do you know what? Last 2 weeks I was talking about how price action is messy and how we have clean levels here. We have this lows here. If you check it on the forward time frame, if you revisit the previous commentaries, or if you remember what I was saying, I said this level here is clean, absolutely clean. So can the market return into this low here? Absolutely. If you look at price action on Friday, you can see Friday closed, this heavy dump here. Market took out the previous day's high, and we have all of these consecutive upward candles. Okay, so the markets could return into this level here. Let me just map out the fair value gap instead, so it's much more easier. So if the market has interest in the previous monthly low, this is the fall time frame, and this is market structure currently is bearish, and this was the market after the market took out buy side liquidity here. I think, did they take out buy side? Let me be sure. Okay, yeah, absolutely. Okay, markets took out buy side liquidity here, and stayed in consolidation. We wanted to see the markets return into this level on the daily time frame and expand, but see how the markets close below this level here, making a retest of it for resistance. And that's one of key indicators. If you a very good analyst, I mean, you really identified what the markets were doing last week after the markets closed below this level. And that's why these kinds of price action are very, very significant. So the markets closed below here, made a retest of it. I mean, if we were bearish, one could easily go short here, right, and aim for probably sell side here if the high time frame institutional order flow is bearish. If we preconceive the idea that dollar index could trade lower last week, then this is a very good setup, because this upclose candle at this candle, that's the change in the state in delivery. That's the change in the state in delivery. And we have a key level here from the daily time frame. So if I wanted to go short here, I won't think about this up close candle. No, I'll first reference this daily time frame level, and a retest of it is how I'm going to frame my setup. Either directly execute here, which is that's what I'm going to do most likely. I would care less of stressing myself to try to amplify the risk reward or whatever, probably until the next subsequent trading days, because I know the markets, if I execute from levels, the markets could always return. And these are the kind of things that happen here. You can see how markets stayed in consolidation at this level. Then the market broke down again, and someone could enter a new setup here. But look at this market for the life of me. Markets drop a couple points, maybe 20 pips, and return back, and very frustrating price action. So if the dollar index has interest on the monthly fair value gap. This is what I'd see them doing, just returning to this gap and trading to sell side liquidity here. Now, like I said, I have no interest, absolutely no interest. So, dollar index could play out however however they want, and I really don't care. At least not even the first week of December. At the very least, and it's not like the second week is going to promise, because we could see this week maybe bullish, and next week, the week that follows this week, bearish again. So, I mean, what's the point? What's the point really? So, next thing to note is that we are in this weekly fair value gap. So I'm going to take this one out. And that's why these kinds of price action are very, very difficult to trade. Very, very difficult. We are currently at the weekly fair value gap. And this is the weekly fair value gap. And notice something, because these folks can play tricks. They can play tricks on you. So this is weekly fair value gap, and this is market trading below previous day's low. I'm going to show you on daily time frame. You can see the market playing below previous day's low. You can also see how this candle closed inside the range of the previous day's candle. And also notice the previous day's candle was bullish, and this candle closed inside the range of this candle after the markets traded into the weekly fair value gap, because this remains the key level on the weekly time frame. Now, this is ideal market structure. Okay, we have a low here, market made a higher high, and market returned back into discount, and we the underlying narrative on dollar index is bullish, and we can see the markets make a consideration for it. So we could see here, markets could qualify this as a Tory soup. You can see this heavy run, this run here. It's possibly they want to induce buys. Okay, they want to induce buys at a discount because DXY is bullish, and someone could easily look at it from the framework of market structure, and that's how I looked at it prior, from the perspective of market structure. But I'm looking at it from the perspective of premium and discount and the high time frame institutional order flow, which is the long-term bias of the market. And that's slightly nuanced, because I'm not just gonna look at market structure and define my bias. No, I define my bias first and understand what the underlying narrative on dollar index is, and then I look at premium and discount and interpret market structure. There's a difference between those two kinds of analysis, and we could see the markets rally up, and this same gap would be crucial for this. I mean, what you want to see is you want to see the markets invert this gap. And what do I mean by invert? Well, we would like to see the markets on the 4-hour time frame. One of the things we want to see is market closes through here and possibly changes the state in delivery and makes a retest of the order block, or possibly the inversion gap. Well, I'll leave it as the order block because it's the primary level you want to look for first, not the inversion fair value gap. Okay, and you can see the market go higher. So that's about the two different ways I could see this market playing out, and that's why I said, do I think, when I started the commentary, do I think the markets are going to return into the monthly fair value gap? No. But can the markets return into the gap? Obviously, yes. And I just define how I think the markets are going to deliver either side of the market. Now, imagine a condition where you can define both sides of the marketplace. That's not high probability. That's simply not. At least the early portion of the week, it's not high probability. So you need to do a little bit of waiting. That's just it. Let me show you what good price action look like. this is what good price action looks like. And the good thing about these types of trades is that every single person here knows how to take these types of trades. I mean, if you look closely here, you see there's a run on liquidity here, market trading to a weekly fair value gap. There was a change in the state in delivery, and there was an entry here. Markets rally up, markets return back into the same level because markets were in consolidation, and markets rallied higher. You know, I haven't gone through all of this. Take something off here. Who knows? They might not take out this high, and I kept on holding, and until I wasn't sure if they were still going to be bullish. I wasn't sure anymore, so I thought we ran this low, started trading higher. I wasn't sure because I was looking at the high chart from the weekly, the daily chart, and all of that, and it seemed bearish on the near term. So I just closed the trade, and markets were, just in consolidation and all of that. Until here again, you can imagine this is literally the same place I closed the rest of the positions, and relatively the same price I gotten new position last week, and you can see how very one-sided this market is. Very, very one-sided. I still have some positions running. The MT5 is now advanced, and I wouldn't need to, edit, my screenshot, try to clean lot sizes and all of that, because I think this is really the most important thing. You see where someone gets in on the trade, see their exit and stuff like that. I think this is absolutely very, very important, because you can understand that, okay, the way this person trades reflects, how they teach, right? And you already have the idea of how they run things, and you can easily replicate it. Now, all of these trades, I promise you, if you look at your chart, it's something you can call. Okay, let's check silver and gold, and let's just quickly. All right. So at the start of this was, look at this gap here on the weekly time frame, on the 4-hour time frame. So you can see they go into the gap, running sell side liquid here, change the delivery. That was that trade. Okay, so there wasn't anything just near the 4-hour time frame to validate the long-term buys, and that's why the change in state in delivery is very, very important. So on the weekly time frame last week, as at the close of the previous week, now mind you, the previous week was when I closed my trade, because I wasn't sure if the markets were going to continue. Okay, I wasn't sure, and I believe that if the markets are going to continue and I'm paying attention to price action, then I'm going to see it, right? So this previous week was indecisive, meaning the markets were in consolidation, and ideally I wanted to see the market trade into this relatively equal highs. And on the daily time frame, we have a discount fair value gap here. Market rallied, market made a lower low. Now this is where things got very interesting here, when market made this low. When market made this low, it didn't reflect on gold. Okay, mind you, I have an entry to on gold, but I mean silver is enough to show. It didn't reflect on gold. Now this is SMT divergence. I mean, what the focal person was asking me a couple of weeks back, SMT and stuff like that. And this market here is making a lower low, and gold is making a higher low. Now this confirms my bias, because the markets returned back where to this level. Now let's investigate what this level is. You can see this candle here. This candle is the weekly bullish fair value gap. Now the markets return here, and what you can see, they took out the previous weekly low here. You can check it on your charts. The market took out this previous weekly low, and I checked silver, and silver failed to trade below this week's low, and this by itself is showing relative strength. I mean, it's giving silver on the weekly time frame relative strength, meaning there is a weekly SMT for the fact that silver failed to run the previous weekly low, and there's a weekly SMT showing that gold ran below the previous weekly low. Given relative strength, obviously, to silver on the weekly time frame. But something interesting again happened on the daily time frame, because when we're seeing silver trade below this low on the daily chart at the end of that particular week, we didn't see the same thing happen or reflect on gold. Okay, now when I saw that, I just needed the 4-hour time frame to validate um, this week's bias, because I already got my framework to be bullish on gold and silver again. And these were details I wasn't seeing during the weekend. If I saw it during the weekend, I would have talked about gold and silver in the commentary, so that we'll be able to participate in this kind of move, right? So on Monday's trading, there was this consecutive downward candle, and I just wanted to see the markets close above this consecutive downward candle, and that would be the change in the state in delivery. And the interesting thing was that silver extremely outperformed. I mean, silver didn't just give me the 4-hour time frame change state in delivery; it closed above the consecutive downward candle in daily time frame, showing huge strength. So ideally, my job to do on Tuesday is to find a way to buy silver. I mean, there's nothing else I want to be doing on Tuesday other than trying to buy silver. And we have the change in state delivery here, and we have this gap here. So um, you buy the fair value gap. Can you buy the change state delivery? Of course, yes, but the market's never trade into it. So if you into okay, I would only buy it here when you see there's an obvious inefficiency here. I mean, you just it's very very painful, anyways. And subsequent price action on lower time frame gave beautiful price action, and that's why the truth is, we are not yet enjoying the fullness of these things I teach, especially in forex, because the markets are in consolidation. Because when you really enjoy it is when you find a market that is heavily one-sided, and you're going to make a lot of money from that kind of market. And when markets are quiet, you just go and rest, because that's what trading is about. There are opportunities in the markets, but not every opportunity would turn out to be or would turn out to be a profitable trade. Really, no, I don't think so. Some opportunities would just take your money, and that's it, and you'll be right. I mean, that's it. So one of the things I wanted to point out here was there was a lower low on silver. Ideally, this lower low here should reflect relative weakness in terms of correlation between gold and silver, but we didn't see that. In actual fact, we saw gold trade sluggishly compared to silver. I could argue that gold already showed relative weakness on its weekly time frame, and silver showed relative strength on the weekly time frame. Well, that makes sense, because that's on the weekly time frame, and the SMT that showed up on the daily time frame was just confirmation. Okay, just confirmed bias. Okay, but relative strength still lies with silver. So it was kind of like very straightforward trade. I mean, and I was studying. I remember sharing it with my partners, and I was like, let's observe gold currently on the 4-hour time frame, since they traded into this weekly gap. Now, this horizontal line, or this rectangle, is the weekly fair value gap, and you can see this consecutive downward candle. There's the change in the state in delivery, and after gold had that, they returned back into discount, and I was telling them they should observe all of the downward candles after markets returning to discount. This is market returning to discount, the weekly gap. Look at downward candles. Look here closely. So you can see after the markets close here, markets return back inside this range, this auto block here. Okay, this is a way for you to capture the move into this inefficiency here. Alright, and also I spoke about observing these downward candles here. You can see this downward candle when markets were returning here, came back into discount, markets were rallying up again. I would have possibly had an early entry on gold when I watched this particular candle close, and it just closed a little bit shy of this. I would have gone in, but I said, okay, fine, since the week is just starting, I could absolutely wait for the daily candle on Monday to close, and I was like, okay, fine, that's what I'm going to do, because I could have gone in here. This is already the order block here. After the close here, this was the order block, and when markets returned back inside the range and started to graduate upwards, I could have bought it at any of these candles. Could have bought it here, could have bought it on this candle, could have bought it on this candle, and also could have bought it on this candle, because we're still trading inside the order block. One, two candles. So this is the order block here. So as soon as these candles were opening, each of these candles were giving opportunities for a buy, because we're still inside this candle. But because of, I have a model I wanted to follow, I didn't want to be aggressive about trading gold and stuff like that. And I was just like, okay, fine, I'm just gonna wait for Monday. By the time I returned back to the chart, I saw that markets had printed heavy towards the closing of Monday's candle. And I was like, okay, fine, I'm going to find a way to get into a trade. And I bought this fair value gap here. Now, these kinds of markets will just give you stability, basically, right? And that's what everyone needs, especially someone who is just getting into trading. You just need a stable market that can give you entries and stuff like that. Euro USD, like I said, I told you last week, this is an absolutely difficult market to trade, and that's what the commentary is for, because it's going to teach you all of those things. It's going to teach you why you need your model. It's going to teach you why you need a system. It's going to teach you patience. It's going to teach you all of those things. Then you take out this lesson and put it out on markets that are predisposed to go in one particular direction. Honestly, to talk about Euro USD is not even interesting. I think I talked about DXY already, and we'll just stick with that. I hope you found this one insightful. Um, until I talk to everyone again, and be safe.